Right, time to look at stocks because it's looking very much like the melt up, final melt up phase is on. Coming out of this intermediate cycle low, not unusual to have a pretty strong rally back to the all-time highs, but this is not only rallied to the all-time highs but broken through, and we've got big follow through now, and you can see the angle of trajectory has changed. Let me widen the chart a bit. All right, so you can see this is the angle of ascent here during this last intermediate cycle. Now coming out of this cycle, much steeper ascent. I said in one of my previous reports that if the Nasdaq just made a beeline up to 16,000, then in my opinion, I think the bubble phase is on. And that's what it's doing here. Where I think at this point the Nasdaq is close enough to 16,000 that it's going to start pulling like a magnet and pull price up to that level. And I am not at all confident that we're going to get normal daily cycle corrections during a melt-up phase. We will get some more volatility. The volatility should increase dramatically as we get deep into the melt-up phase. The melt-up phase back in 99 and 2000 took 6 months. So use that maybe as a template. We could have 6 months of this. And as you get deep into the melt-up phase where smart money starts to get nervous and they start taking profits at certain levels, you'll get volatile pullbacks. During the 99-2000 melt-up, we had a couple of, I think one was 11 and one was maybe 13% pullback, literally in the matter of 3 or 4 days. So that's something we can probably expect. And in real time, that's going to look like the bottom, or I'm sorry, the top is in. But what happens is the fear of missing out by retail traders, they come in and they buy that dip. And then the retail traders are what push bubble. They're willing to place market orders and hit really wide ask prices just to get in. They're afraid of missing out on the rally. So retail is what drives this, and I think we're probably in this stage now where retail is noticing there's free money in the stock market, and they're going to start piling in, and that's what causes this vertical melt-up phase to progress. So everything is showing signs that we are starting the melt-up at this point. So I'm not going to trade with the expectation that we're going to get normal corrective moves, normal daily cycle corrections. They may happen, but then again, they may not. And exiting could cause me to miss a huge chunk of the rally. I've already watched people, dozens of people, exited trying to take profits on their positions. They had some really good profits coming out of here. They exited under the assumption that they were picking a top, going to get a pullback, and they could buy lower, and the market has just run away and left them. And now they're paralyzed. They can't get back in because the market's extremely overbought. And they're afraid if they buy here, then they're going to get caught in a correction, which is what they were trying to avoid back here. And all they did was they just knocked themselves off of the melt-up phase, and now it's going to be extremely difficult to get back in unless you just take a longer-term view of this. Assume that the melt-up could last 6 months, and if that's the case, then you don't really worry too much whether if you get in right now you're going to get hit with some kind of a pullback, because the pullback will be recovered and the melt-up will continue. So that's the only way to get back in, is you got to change your mindset and take a longer term view. If you're trying to trade short term here, that kind of mentality and strategy has already cost a lot of people to miss a lot of this move. Now, on the other hand, I think we're getting pretty close to a bottom in energy, and we may have gotten it yesterday. Um, this is was a pretty convincing rally early this morning, although it's fading here. So maybe you want to get half position in energy here, just on the chance that this bottoms at the 23% Fibonacci retracement, and then if it goes lower, you can put the other half on. If this turns and goes back up, well, at least you got a half position and you can chase with the other half. But this is a market where you're not at risk of missing big chunks of the move. The move maybe hasn't started yet. If it did, then it's only on day one. So you've got a lot of upside potential in energy here, even if we do have to go a little lower. And then real quick in the metals, I guess this looks like this is probably a short daily cycle low. However, as I said, I expect a lot of whipsaws. We're getting deep into the intermediate cycle. We've already gone through the first daily cycle, and I guess the second daily cycle. Price still isn't close to making a higher intermediate high above this first daily cycle high, and it's a long ways from breaking this intermediate high, which is what would have to happen in order to break the downtrend that we've been in. We have not made any higher intermediate highs yet, and we're still a long way from this. So, I've watched people in the challenge try to trade metals. I've tried to trade metals. This is just not a market that's going to be easy to make money in. It's you make a little money, you lose a little money. You make a little money, you lose a little money. One of those type market. So here's the bigger picture. There's just no trend. There was a pretty strong trend down. Now it's just a trend going sideways, and it's just almost impossible to make sustainable gains in this kind of a market. You can make gains, you can catch these rallies, but it's virtually impossible to consistently time the tops of each one of these, and and make any money on these little rallies or declines back and forth. So as of right now, this is still a market that's just churning, and nobody is really making any money here. Not yet. I think we got to complete that 8-year cycle low, and I'm not convinced that this is an 8-year cycle low. That I am expecting a short cycle, but this is just way too short. I think we're probably going to continue this churning, and then maybe get a final low in 2022, and it may not be, it would have to break this to qualify as an 8-year cycle low, but it may not break it by much. It could be just a marginal undercut, and then we start the advancing phase of the next 8-year cycle. But this is just going to be a very difficult market to make, or more importantly, to keep any gains in. So maybe this is an early second daily cycle low, but I think it's going to be difficult trying to time the next top and keep any of your gains if this was the bottom. I think 99% of you will be better to just keep stacking physical silver, and then whenever we do get the bottom and we do get the advancing phase, you're going to make a lot of money. In this kind of environment, you're probably, at best, you're probably going to break even over the long haul.